Here we are at the end of another year, and some investors are wondering what in the world is going on with the stock market. We see the Dow notching record highs. We see the S&P on a tear. We're still sitting below the all-time high in the S&P 500, which happened at the beginning of January 2022. But these are the right questions to be asking. We came into 2023 with the highest expectation of recession since really going into 2009, but yet somehow the economy, because of the excess spending, the money in the system, and interest rates, the economy has really surprised the Federal Reserve. Chairman Powell said so in his last meeting. It's surprised economists, it's surprised pundits, and it's surprised investors, the resilience of the U.S. economy and the consumer spending. Now, this last stretch of 60 days in the market has been the largest market participating move we've seen in really 2 years. Up until this point, and this point being at the end of October, where we saw the market hit its low for the year, up until that point, it had really been about 7 stocks. The 7 stocks we've talked about in previous videos, the 7 stocks we have talked about over and over again in our meetings face to face. But as we sit today, the last 50 to 60 days has seen the most participation from the other stocks in the market that we've seen in 24 months or so. And so is that a leading indicator of things to come? We think it can be. And what we mean by that is moving into an election year, and we have a previous video on this where we discussed that the statistical probability and the returns in election year are hard to argue with since 1928. We think that's likely more of the same in 2024. Now, the U.S. economy, the federal government, and politicians in general have a lot of questions to answer and concerns to subside. But we are cautiously participating and cautiously optimistic that the next 12 to 14 months can produce positive returns for investors in alignment with the historical averages we've seen, which is in that 10 to 11% range in election years, dating back since 1928, 84% of the time. So while the stock is starting to gain more momentum, a chief investment officer at Schwab said it best. Up until this point, those 7 stocks, they call them the Magnificent Seven, Microsoft, Google, both shares of Google, Apple, Tesla, Amazon, Meta, and Facebook, those 7 stocks have been like generals. And there really wasn't going to be any kind of real support until the troops fell in behind the generals. Well, we're starting to see a number of troops or other stocks fall in behind these Magnificent Seven and leading the most sustainable, the most meaningful, and the most substantive market rally we've seen. Now, there's a lot pending on fourth quarter earnings, on holiday spending, on what the Federal Reserve does at their next meeting. So again, we are cautiously optimistic, but as you've seen in your portfolios, we are and have been aligning with a bend towards growth rather than just defense and preservation. So stay tuned, but this rally seems to have the most substantial and substantive legs that we've seen in nearly 2 years. Hang tight, Merry Christmas, and Happy New Year.